This is Nightly Business Report with Bill Griffith and Sue Herrera.
China in focus. An industrial bellwether and a technology giant cut their outlooks, both blaming the world's second largest economy. Big week. From earnings to the Fed to the jobs report, investors will be contending with a number of issues that could affect their investments. And ready, set, file. Tax filing season starts today, and there are some key changes to keep in mind. Those stories and much more tonight on Nightly Business Report for this Monday, January the 28th. And we do bid you a good evening, everybody, and welcome. Sue is off tonight. Investors were hit with a surprise 1-2 punch first thing this morning. Not exactly a pleasant way to start what is going to be a very busy week for the markets. Dow component Caterpillar and chip giant Nvidia both warned that business is not exactly going as planned, and that added to the ongoing concerns about a slowing global economy and its potential impact on corporate profits. Here are today's final numbers that we have. The Dow fell about 208 points, was down 400. Closed at 24,528. The Nasdaq dropped by 79. The S&P was down 20. But let's begin with Caterpillar, which reported its biggest earnings miss in about a decade. The world's largest heavy equipment maker said it was hit by softening demand in China, and that hit the stock, which fell 9% in today's trading. Morgan Brennan has more on why Caterpillar cratered.
It was an ugly quarter for Caterpillar, and the outlook isn't much better. For 2019, the maker of earth-moving machinery projected profit and sales that will grow, but grow less than analysts had expected. On the earnings call, CEO and Chairman Jim Umpleby discussed the impact of slowing global growth, coupled with higher manufacturing costs.
We've kept a very close control of cost, and you saw our period cost in the fourth quarter of 18 were actually less than they were in the fourth quarter of 2017. I do remind you, though, that we are guiding to a modest sales increase in 2019, so we are not guiding to a sales decrease. Having said that, we'll continue to closely monitor costs, and we'll always be ready for whatever the market sends us.
China, which comprises up to 10% of Caterpillar's overall sales, was especially in focus. After strong growth in recent years, the company now expects that market to be flat this year, even as other parts of the Asia-Pacific region grow. Latin America also remains weak, and political and economic uncertainties in Europe, Middle East are a watch item. The standout, North America, where the company says a strong U.S. economy will drive sales of industrial and construction machines. Analysts say there is more uncertainty, but that Caterpillar's miss had more to do with company-specific issues rather than an end to the cycle of growing demand for machinery.
I did lower my price target today to $172, and that was a multiple lower. That's a 14 multiple on next year's earnings estimates, as opposed to a 15 multiple that we have prior, which would represent mid-cycle. So I think after today we have to recognize that maybe 2019 is post-mid-cycle, though we still do not believe 19 is the peak where Caterpillar is currently trading.
As for higher costs, Caterpillar blames more expensive metals, thanks in part to tariffs and a tight freight market, and has been raising prices to offset them. Nonetheless, today's report sent shares sliding, and with it, the stocks of other major industrial bellwethers, as well as the Dow overall. For Nightly Business Report, I'm Morgan Brennan.
And now to Nvidia, which also warned of weakness in China. The semiconductor company said that quarterly revenue will fall short of expectations, and is just the latest company in that industry to blame slumping sales on a slowdown in the world's second largest economy. And that caused Nvidia shares to slump nearly 14% in today's session. Josh Lipton has those details for us.
It's become a common theme this earnings season. Tech companies warning investors that a weakening Chinese economy is impacting their results. The latest victim is Nvidia. The chip maker said it now sees weaker than expected sales from its gaming division due to weakening macroeconomic conditions, especially in China. The fourth quarter was an extraordinary, unusually turbulent, and disappointing quarter, said Jensen Huang, Nvidia's founder and CEO. The company also reported challenges in its business of selling chips used in data centers, saying that a number of deals in its forecast didn't close in the last month of the quarter as customers became more cautious. Other companies have recently called out China as a problem too. Earlier this month, when Apple cut revenue guidance, it highlighted the challenge of a slowing Chinese economy. So did Intel. Even before today, Nvidia stock had been under pressure, in part due to what executives at the company called a crypto hangover. People use its graphics cards to perform the complicated computing work needed to accumulate cryptocurrencies. But as those digital currencies drop in value, demand for those products dried up, leaving the company with excess inventory. Still, some see better times ahead for Nvidia.
I do think we will see momentum return with Nvidia, but again, it's a second half story.
Nvidia CEO Jensen Huang said the foundation of his business is strong and that the markets he's targeting, including autonomous vehicles, are important and growing. But investors are clearly skeptical. Nvidia reports results on February 14th. For Nightly Business Report, I'm Josh Lipton, San Francisco.
As it happens, this will be the busiest week of corporate earnings for this cycle. And not only are investors bracing for that wave of quarterly results, but there will also be some important economic reports released as well. Bob Pisani looks now at the issues that could shape the market in the days ahead.
Stocks tumbled to kick off a very busy week. The Dow had fallen more than 400 points, but managed to close well off of the session lows. Caterpillar alone was responsible for almost a quarter of the Dow's drop today, but the broader market's declines were still very modest given all the negative headlines out there. Many investors still think the stock market's looking for an excuse to go higher. We're right in the thick of earnings season now, and the market's telling us that three issues really matter. First, the Federal Reserve meets tomorrow for the first time this year. The question is, how passive or dovish will the Fed and other central bankers be when it comes to keeping interest rates near rock bottom levels? That's number one. Second, the U.S. will meet with the high-level trade delegation from China this week. How positive will the outcome of those negotiations be? And finally, how much slower will global growth get? The message from Nvidia and Caterpillar is pretty clear. Earnings are still too optimistic in the face of weaker global growth, particularly in China, and earnings estimates for 2019 need to come down more. That's the message. This is important because the big debate is over whether we'll see an earnings recession this year. That would be 2 straight quarters of negative earnings growth in the S&P 500. First quarter earnings growth is now down to below 2%, and the second quarter earnings are looking only a little bit better so far. Big debate right now. For Nightly Business Report, I'm Bob Pisani at the New York Stock Exchange.
So to review, we have a slew of earnings. The Fed meeting is this week, a resumption of trade talks with China, and the big monthly jobs report will be out on Friday. Quite a week, right? Coming up, let's talk with Art Hogan. He's the Chief Market Strategist with National Securities. I mean, where do we begin here? Let's start with earnings. And it doesn't get any bigger than the companies that will be reporting, among them Facebook, Apple, Amazon, and Microsoft. What are your expectations this week, Art?
You know, Bill, it's interesting that we've spent the month in earnings season and got about 20% of the S&P 500 reported, and 24% are going to report this week. So it's a very busy week. I think on balance, earnings are going to be fine for the fourth quarter. We're going to see somewhere between 15 and 20% earnings growth, and that's probably going to be on 6 to 8% revenue growth. That's fine. That's a normal quarter for last year. But the guidance is the real hard piece, and that's always the case. But it's even more difficult because we had a government that was shut down for 35 days, right, and there's no end in sight for the China trade war. So I think guidance is the hard part. And if I was a CEO, I don't know how reticent I might be about what 2019 looks like.
The Federal Reserve meeting, they're not expected to raise rates this time around, but it'll be interesting to hear what clues they can provide for the rest of the year, right?
Yeah, the Wall Street Journal dropped an interesting story last week saying they might even slow down the reduction of the shrinkage of the balance sheet. I don't think they'll talk about that. I think they talk about it at every meeting, but it's never been part of the minutes. I think they indicate that they continue to be data dependent. I think they're on hold for most of this year unless and until we can actually get the China trade war behind us. And I think that's where they stand. We'll probably hear more about that in the Q&A.
And by the way, some of those economic reports that they would depend on won't be out this week. They've been delayed because of the government shutdown. So they may be in the dark as much as we are right now.
Right, yeah. The tricky situation.
Yes. The China trade talks. Now, there have been times when the markets have responded violently to reports either positive or negative. They are set to resume again this week. What are your expectations?
Yeah, it's such a good point, Bill. If someone on the hawkish side, like a Lighthouser, has something to say, the market's going to react negatively. If Wilbur Ross comes out and says we're miles away from an accomplishment in China trade, the market's going to sell off. But have a moderate like Larry Kudlow, for instance, who's actually straight down the middle. I think we're a lot further along in the process, and I think both sides want to accomplish something sooner rather than later. I think the administration would definitely like to put a win up, and I think that China's economy is slowing enough that they're feeling the pain from this. So my guess is we hear something constructive, if not this week, certainly before the end of the quarter.
Finally, quickly, Art, your expectations for jobs on Friday. We've had some odd numbers the last couple of months.
Yeah, it's going to be hard to put any credibility in this number. We had a blockbuster number last month. Remember, we were at the 311,000. Estimates for about 170. I wouldn't be surprised if we were something less than 200, but something more than 150. So I would say that the estimates for 170 are probably right in the sweet spot.
Art Hogan with National Securities. Always good to see you. Thanks for joining us tonight.
Thanks, Bill.
Elsewhere, today's market decline notwithstanding, stocks have experienced a sharp recovery over the past month, but that's not necessarily alleviating investor nervousness. Mike Santoli now measures the mood of the market.
The stock market's strong start to the year has calmed the most extreme fears from December that a recession was on the horizon and a bear market underway. But even with the broad stock indexes up more than 10% in a bit over 4 weeks, the investor mood remains cautious and watchful rather than outright enthusiastic about the economy and the market. Investors have continued to pull money from equity funds in the early weeks of 2019, despite a typical tendency to add to investments at the start of a year. And big institutional funds bruised by the near 20% market drop in the final months of last year have likewise been hesitant to re-enter the equity market fully, according to strategists who track the supply and demand for stocks. And surveys of investor opinion have shifted up to neutral from extreme pessimism in recent weeks, but are far from reflecting outright optimism. Perhaps this hesitance is to be expected given the market's recent performance and confusing news flow. The S&P 500 remains some 10% below its September peak and is off almost that much from 12 months ago. The economic numbers have been mixed, with strong employment data offset by softer industrial demand. Corporate earnings are still expected to be up slightly this year, but estimates are now slipping uncomfortably close to the flat line. And of course, the long government shutdown and unsettled trade standoff with China are complicating the jobs of economic forecasters and CEOs alike, as both groups work to decipher signals about the durability of the economic expansion. Cautious sentiment might not be the worst thing for the market, though. When investors are ambivalent toward stocks and lightly invested, it can mean pullbacks are less alarming. And as the old saying goes, stock prices often climb a wall of worry. And it is clear that such a wall remains in place after months of dramatic and jarring market action. For Nightly Business Report, I'm Mike Santoli.
Time for a look at some of today's upgrades and downgrades. Now we begin with Brazilian mining company Vale, which was downgraded to hold from buy at Jefferies. The analyst cited that deadly collapse of one of the company's dams in Brazil over the weekend. The cause of that is still unclear. Price target on Vale is now $14, and shares today fell 18% to $11.20. Amgen was downgraded to inline from outperform at Evercore ISI. The analyst cited patent concerns and increasing competition for certain drugs. The company reports earnings tomorrow, by the way. Shares fell more than 3% to $191.95. Grubhub was upgraded to outperform from neutral at Credit Suisse. The analyst cited the company's aggressive investments in its delivery network and new restaurant chain partnerships. Price target now $130. It's about 60% above where it closed today. Shares rose a fraction to $80.99. And Credit Suisse also upgraded Wayfair to outperform from neutral. The analyst cited confidence in the retailer's blueprint for growth, both domestically and overseas. And that price target is now $130. That stock rose 2% to $104.47. Still ahead, tax tips for the first filing season under the new law. The Justice Department today charged Chinese tech company Huawei with fraud, ratcheting up tensions between our country and China. The charges against Huawei and its chief financial officer, Meng Shou, include money laundering, bank and wire fraud, and conspiracy. As you know, Ms. Meng was arrested in Canada in December. Meanwhile, the FBI director says the charges lay bare Huawei's alleged blatant disregard for the laws of our country and standard global business practices. A new report out today says that the partial government shutdown cost our economy a total of $11 billion, $3 billion of which will never be recovered. The Congressional Budget Office cited the furloughed workers as well as the delay in federal spending on goods and services and the reduction in aggregate demand. The numbers do not, by the way, incorporate other indirect negative effects like businesses that could not obtain needed permits and licenses or access to loans. Elsewhere, a new survey of business economists shows that they mostly believe the economy will not enter a recession in the next 12 months. But the report also showed that there's less optimism about some key business conditions. Steve Leisman explains.
We began a big week for data with an ugly business outlook survey from the National Association for Business Economics. It was taken during the shutdown, and hopefully that influenced it to the downside, and maybe it'll snap back now. The current assessment of sales and profits has some of their biggest drops in the 38-year history of the survey. Employment held up and actually rose a bit, but capital spending plans fell sharply, hitting their lowest level since the second quarter of 2017. And the plans for capital spending in the next 3 months fell below the level where they were before the tax cuts were enacted. Fully 84% of firms say the tax cuts have had no effect on hiring or spending plans, though it is a bit higher for goods producers. Some good news in the survey: 77% say tariffs have not affected hiring or spending plans, and businesses say it's still tough to find workers, and few see a recession this year. There'll be other important data this week: consumer confidence on Tuesday, the big Fed decision, and ADP payroll data on Wednesday. Jobless claims on Thursday are followed by the January employment report on Friday. The consensus sees 170,000 jobs being created. Two big questions: how much was the economy affected by the government shutdown, and when will we see the economic data that was never published because of it? Government data crunchers just got into the office today and tell me it's too soon to know when the economic reports can be released. For Nightly Business Report, I'm Steve Leisman.
Guess brings back a former executive to lead that company, and that's where we begin tonight's market focus. The retailer's former chief operating officer, Carlos Alberini, will return to become its CEO, replacing Victor Herrero. Guess is in the midst of a turnaround caused by shifting consumer tastes and the rise of e-commerce. Sound familiar? But investors didn't exactly embrace this announcement this morning. The stock fell by 14.5% to $19.17. California regulators are reviewing PG&E's request for an additional $2 billion in financing for that company's expected bankruptcy. In all, the utility is now seeking $6 billion in borrowing. PG&E faces mounting liabilities for that state's deadly wildfires over the last few years, and it's widely expected to file Chapter 11 maybe tomorrow. The stock rose 2% today to $12.01. Whirlpool late today reported an unexpected decline in revenue in the fourth quarter. The appliance maker said that rising material costs, tariffs, and higher freight costs affected its North American operations. It also cited soft industry demand overall, and that sent that stock lower in initial after-hours trading tonight. Shares finished the regular session down a fraction to 124.46. Well, it's that time of year again, tax season. The IRS started accepting 2018 income tax returns today. And of course, this is the first year that everybody is going to be filing under the new tax laws. Senior personal finance correspondent Sharon Epperson joins us tonight to talk about what you need to know. And there's a whole lot out there. And there's some confusion, obviously, about what you're going to need and not need in terms of documentation. What do people believe right now about this tax code?
Well, what's really interesting is what they don't know. A recent survey came out today from NerdWallet looking at what do people know about the Tax Cuts and Jobs Act of 2017, and half of them didn't even realize that that bill was signed into law in 2017. A quarter of them were unsure what really changed with this new tax law, and then almost 1 out of every 2 people didn't really understand how it affected their tax bracket. And that's probably one of the biggest changes, the lowering overall of income tax rates. And so that's something that people should definitely know.
There are some other key changes, though. What are they?
There are some key changes. That increase in the standard deduction is key. The fact that it nearly doubled to $12,000 for individuals, $24,000 for couples, that's significant. The fact that personal and dependent exemptions went away when that was over $4,000 for those each individual who could claim that. Itemized deductions have been more limited. That cap on state and local taxes of $10,000 is significant. But for some, even more significant is the fact that miscellaneous itemized deductions, like your tax preparation fees and those unreimbursed job expenses, those have gone away entirely. And then some good news, though, if you have kids, if you're filing with a child under 17, that child tax credit has increased, and it's gone up to $2,000 from $1,000. So that's significant as well.
So what documents do you need, especially if you're going to itemize, huh?
Well, a lot of people who are going to itemize are going to have to make sure that they have certain documents in place. Your mortgage statement from your bank, of course, the property tax information you get from your municipality. And regardless of if you itemize or not, you're going to want to have the documentation about any student loan interest. If you have that and you're going to try to claim that deduction, as well as any child care expenses, if you want to claim that credit, you need to have documentation for that as well.
Now, to add to the confusion, the shutdown, does that delay this whole process or not?
So that's what a lot of people want to know. When am I going to get my refund? And so the IRS says 21 days is how long it takes to get your refund. But keep in mind that if you didn't understand that there were changes in those tax rates and you didn't change your withholding, your payroll may be different than what it should have been. And you may not get the refund that you expected if you get one at all. So that may be a bigger deal, Bill, than what's happening in Washington, the fact that people haven't really looked at their pay stubs. So now they need to do that.
Thank you, Sharon, very much. Sharon Epperson joining us tonight. Coming up, the company's hoping to score a touchdown during this weekend's big game. The U.S. today imposed sanctions against Venezuela's state oil company in an effort to empower that country's opposition leader and to weaken embattled President Maduro's government. The actions will block $7 billion in assets and cost that country $11 billion in lost exports over the next year.
Effective immediately. Any purchases of Venezuelan oil by U.S. entities, money will have to go into blocked accounts. Now, I've been in touch with many of the refineries. There is a significant amount of oil that's at sea that's already been paid for. That oil will continue to come to the United States. If the people in Venezuela want to continue to sell us oil, as long as that money goes into blocked accounts, we'll continue to take it. Otherwise, we will not be buying it.
Secretary Mnuchin also said that the sanctions will have a minimal effect on U.S. refiners doing business in that country. Natural gas prices fell on a warmer forecast for February. Weather models show more normal and even warmer than normal temperatures for parts of the U.S. following this week's cold snap. The market has been volatile this winter because of on and off concerns about the amount of gas in shortage and temperature fluctuations. Meanwhile, the price of natural gas futures tumbled today. The average price of regular grade gasoline rose 2 cents over the past 2 weeks. According to the Trilby Lundberg survey, drivers on average were paying $2.33 a gallon to fill up, following a steady decline over the past few months. The highest average price in the country, San Francisco, $3.40. The lowest price, $1.89 in Tulsa, Oklahoma. And finally tonight, automakers are traditionally big advertisers during the Super Bowl, and this year will be no different. But there are some new trends taking shape during what is always the most expensive advertising day of the year. Julia Borston has more.
Super Bowl ad time selling for a record $5.25 million per 30-second spot this year, up a hair from last year.
The price of a Super Bowl ad has doubled over the past 10 years, and that stands in contrast to premier primetime television programming, where the average price of a commercial, because of audience fragmentation and ratings erosion, has actually fallen by about 12% over the past decade.
Many of the usual brands are back. Anheuser-Busch buying a record 6.5 minutes of ad time, along with at least 5 car makers, including Kia, Audi, and Mercedes. One new theme, ads targeting women, featuring women. Serena Williams stars in Bumble's The Ball's in Her Court ad, and Olay's running its first Super Bowl ad with Sarah Michelle Gellar.
White Russian.
And celebrities are again a big trend, with at least a dozen stars featured in ads, including a Stella Artois spot with Jeff Bridges and Sarah Jessica Parker, and Doritos is pairing the Backstreet Boys with Chance the Rapper for its commercial. Brands in the big game are looking to maximize their investment by driving the conversation online. They're sharing their TV commercials and broadening their reach by buying ads for them on Facebook, Twitter, and YouTube. Facebook says last year during the Super Bowl, over 90% of TV advertisers were also advertising on Facebook. And YouTube taps into that interest as well.
People on YouTube are talking about the big game, talking about ad creative for about a month up to the game itself, and then another week or two afterward. And so by participating with YouTube and in a digital environment, those brands are able to make much more of their spots.
YouTube's Ad Blitz is a destination for Super Bowl spots, growing traffic over 60% last year, with YouTube expecting similar growth this year.
We're seeing 2 major trends. One is advertisers who are introducing short-form teaser ads, 6-second ads that give you a hint and try to build momentum and excitement for the big game reveal. And then second, folks who want to have longer form advertisements.
One other ad trend, companies who are not shelling out millions for TV ad time are still tapping into excitement about Super Bowl ads. Skittles is producing a 30-minute musical to run on Broadway on Sunday. It's running ads about what it's calling Skittles Commercial, the Broadway musical, but it's not buying time in the big game. For Nightly Business Report, I'm Julia Borston in Los Angeles.
Before we go, a final look at the day on Wall Street. A down day on those earnings warnings. The Dow fell 208 points, well off the lows of the session. The Nasdaq was down 79 and the S&P 500 was down 20. And tomorrow, more earnings. Apple among the big ones. That's Nightly Business Report tonight. I'm Bill Griffith. Thanks for watching, everybody. Have a great evening. We'll see you tomorrow.